Welcome to episode 25 of In the Abstract, a Lakeland Title podcast. And for this episode, I'm going to explain the closing disclosure form. That is the form that is used in residential real estate transactions that shows where all the money is going. I'm your host, Bryan Jeansonne, the founder and owner of Lakeland Title, and let's get into it. And for those of y'all listening on a podcast platform, you might want to watch this episode on the YouTube channel because I'm going to be actually going through the actual form. And so it's going to be a little bit easier for you to see what I'm pointing to and talking about rather than just listening to it. So just something to keep in mind that you might be a little lost just by hearing the audio version of this. So the closing disclosure form is required to be used for any residential real estate transactions. If you're doing a commercial transaction, you may use a settlement statement or a HUD form. But since most people are going to be doing residential real estate transactions, I'm going to talk about just the closing disclosure form on this podcast. But I may do a video later discussing the commercial forms. So let's take a look at it and see what it looks like. So this is what the closing disclosure form looks like. You're going to see the date issued, the closing date, and the disbursement date. Disbursement date just refers to when the money is going to leave my escrow account. So in a normal closing, when you're buying a piece of property, the closing date and the disbursement date are going to be the same. So the closing date's when you sign. If you were doing a refinance, there's a 3-day waiting period for refinances. So that closing date would be one date, and then 3 days later would be the disbursement date. The settlement agent, that would be my title company or whatever title company you're using. And then this file number here is going to be the file number that the title company is using. So it's not going to be the lender's file number or your realtor's file number. So if you're calling to talk to your lender, they're not going to use that file number to reference your file. They're going to use over here this loan ID number. It's going to have the property address, the sale price. You're the borrower, so your names would be up here, and the seller and your lender and the type of loan. So this 30-year loan was on this one. It's fixed rate, and you see you have the choices: conventional, FHA, VA, or if this other one is clicked, it may have like a rural development loan or something like that. So then you're going to have your loan amount, interest rate. So all the most simple information is going to be on this first page. And again, if you have questions about your closing disclosure, feel free to ask the title attorney or your realtor or your lender. There are no stupid questions. They're happy to answer those questions for you. It's what you're paying them for. So don't feel bad about asking them to explain stuff to you. They'll be happy to do it. So it's going to show your principal and interest payment here. If there's a prepayment penalty or balloon payment, it'll tell you that here, yes or no. And then this is an FHA loan, so they're only putting 3.5% down. So they're going to be paying some mortgage insurance. So it shows that mortgage insurance payment, which will go away after year 11, because that's when they'll hit the 80% loan to value number. So it just shows how the monthly payment changes over time. And then this is the extra amount that's added in to pay the property taxes and homeowners insurance. So that money is escrowed in an account for you and then used to pay those two bills when they come due. And then it'll show you your total closing costs right here, and then the cash to close. So this is the amount you'll have to bring for the down payment. So the second page is where it gets a little more detailed. So it's going to show any discount points that you're getting. So discount points are just a fee that you can pay to kind of buy down your interest rate. So a point is going to be a percentage. So if this person was getting 1.375% off the loan, so they were buying that many points, and that's how much it was costing them. That's something you can talk to your lender about. Sometimes it's cost prohibitive to do that, but sometimes it makes sense. So it's something you can discuss with your lender. And you see they've got their various fees here. You'll see like an administration fee, document preparation fee, underwriting fees. If you're doing a hybrid closing, which if you don't know what that is, I did a video on that one on the channel, so you can listen to that. They might charge you, some kind of technology fee in this section here. And this is generally right here, the services borrowed did not shop for is going to be things that the lender picked. So the lender picked the appraiser, so that's that fee, and the various like credit reports and things like that. So that's all going to be right here. Those fees that you really didn't get to have any real say in or shop around for. Then there's going to be services that you can shop for, because you get to pick your title company, so you can shop that around. So there's going to be like abstract fees and courier fees and things like that. A CPL fee is just a closing protection letter. It's something that lenders require just to certify that your title insurance is going to be issued on that particular loan. And then there's going to be the title insurance amount, lender's title insurance. Lenders always require you to buy title insurance for them. And there's going to be a settlement agent fee in there. Then there'll be some other fees, like the fees to record your deed and your mortgage. And if there's any kind of like taxes that would apply or anything like that, it would be in this spot right here. And then prepaids are things you're paying for in advance. That would be like the homeowner's insurance. You're going to pay for that for the whole year up front. So that's going to be right there. And any kind of prepaid interest. So usually it's from the closing date to the next month. You're going to pay that interest right there. Then there's the initial escrow deposits. So you're going to be putting some money into that escrow account for your taxes and insurance, just so that something to kind of kickstart the account. So there's enough money in there when the end of the year comes and those bills have to be paid. So that's going to be in there. The real estate commissions, those are paid by the seller. So you don't have to worry about that if you're a buyer. We're going to go over the seller closing disclosure in a minute. And then your owner's title insurance, which is optional, but highly recommended because you're already paying for up here, the lender's title insurance. So to get the owner's title insurance is not that much extra, and it protects you for your entire purchase price. Whereas the lender's title insurance only covers whatever the outstanding amount of the loan is. So it's a very valuable thing to get. I highly recommend it. Again, you can ask your title company to explain that to you, and they'll be happy to explain what owner's title insurance does and the benefits of it. If there are any lender credits that they're giving you, sometimes they'll give you little discounts or something like that. Those will be right in here. And then on this last page, it's going to kind of summarize everything. Sometimes it'll show the difference between what was on your loan estimate and the actual final closing disclosure, and it'll show you kind of the differences, and they're usually pretty close. So nothing really to worry about there. And then here's the summary on the buyer side. So it's going to just show how much you need to bring, and then it's going to show the sales price, closing costs, and then this person was paying off a car loan as part of this transaction. So that's in there. Your deposit, and then your loan amount, the loan you're getting. And then in some situations, like in Louisiana, our taxes are due at the end of the year. So the seller is giving the buyer credit for the time that they owned it from the first of the year to May, a credit for those taxes that they're going to have to pay at the end of the year because the seller owned it during that time. So they're paying the taxes for that period of time. And then it's going to show, just like it did from the first page, it's going to show how much you need to bring. So it's going to show that amount that you'll need to bring in the form of a cashier's check or wire to the title company. And then it'll have some additional information about kind of different parts of the loan, some of the aspects of it, and kind of late payments or things like that, and more information about the loan. And then you'll have everyone's contact information down here at the bottom on the last page. So it's going to have your lender's contact information. If you had a mortgage broker, the real estate agents will be here for the buyer and the seller, and then the settlement agent, so the title company, all their information, everybody's contact information will be right down here. So if you ever need to get in touch with anybody, that's where you can find how to get in touch with everybody, all their emails and phone numbers, license numbers, all that kind of stuff is going to be right there. And then you'll sign it, and that's it. Now for sellers, yours is going to be a lot shorter just because there's no loan involved. You're just getting money. So it's only 2 pages here. And the same kind of thing. It'll have that file number, property address, the buyer and the seller. So your information there. Again, it'll have everyone's information right here. And it'll just show anything that is coming out from your side, kind of the summary as on this page. And then you go to the next page and it's more detailed. So it'll show those real estate commissions that you're paying. And in this transaction, there was a roof repair that was being paid. So that's in there. Anything else that needs to be paid will be on that side for the seller. And that's about it. So not very difficult to understand, but if you've never seen it before, I could see how the form could be sort of intimidating. So I wanted to go through and just kind of explain it. Well, I hope you'll enjoy that episode. Again, if you have any questions about a closing disclosure for a transaction that you're involved in, feel free to ask the title company or your realtor or lender. They are happy to explain it to you. There are no stupid questions. That's what they're there for. It's what you're paying them for. So anything you don't understand, just ask them. They'll explain it, and we will see y'all next time.